There's a mortgage rate relief program for first-time homebuyers. It is part of Fannie Mae and Freddie Mac's guidelines. We've got all the details in a chart that shows what eligible buyers get. Let's get into it. I'm Dan with homebuyer.com. My NMLS is 227607. Our lender NMLS 423065. We are part of Novus Home Mortgage, a division of Exonia Bank. Read more about homebuyer.com in the video's description, including our lending coverage and very important disclaimers. Also, don't forget to hit the subscribe button. This channel, it's full of excellent homebuyer education, which is of course different from legal, tax, and financial advice, which you can better find somewhere else. I'm not a lawyer. This is a mortgage video. And when you are ready to check your eligibility for mortgage, to get your mortgage pre-approved, you can do that online in about 3 minutes for eligible buyers at homebuyer.com/fast. Okay, this video, it's about the FHFA First-Time Homebuyer Mortgage Rate Discount. It's a program that was started, it's now administered by the FHFA, a government agency. It was started in 2022 when mortgage rates were rising, and which I feel was started in response to members of Congress taking their time with respect to pro-first-time homebuyer legislation. Bills like the $15,000 First-Time Homebuyer Tax Credit Act and the Down Payment Toward Equity Act, the DASH Act, all of which would make it easier for eligible buyers to achieve their American dream of home ownership. My opinion is that when Congress didn't give relief, the FHFA, the government agency that backs the majority of U.S. mortgages, it just decided to take the job on themselves, giving us the FHFA First-Time Homebuyer Mortgage Rate Discount Program. If you are a first-time homebuyer, your income is average or below average for where you live, for your metropolitan area, and you meet the eligibility standards of a conventional mortgage, which is a loan backed by Fannie Mae or Freddie Mac, the first-time homebuyer mortgage rate discount is yours. That's the gist. And for how the program works and the specifics of how big of a discount you can get, stick with me here because some of what we're going to talk about, this will be the first time that you're hearing it and hearing your life. It's about mortgage rates and how they get made. It's the concept of risk-based pricing. That everyone's mortgage rate, the conventional rate that's quoted by their lender, that it's customized, that it's personalized for that person only based on how much risk is within their mortgage application. So those risk-based rules, they apply to everyone. Risk is not subjective. It is fair and uniform by lender. You can think of it like levers or buttons that are pushed for each additional risk included in the loan. And with each push of the button, with each lever pulled, the rate on your mortgage goes up. It's like auto insurance. There's some base rate. It starts with your car type, where you live, whether you park your car in a garage. And then there's additional risk based on your driving record, on how many miles you drive, what your commute looks like. Those levers determine how much you pay for auto insurance. And that's why your auto insurance is different from everybody else, because your risk factors are different from everybody else. Mortgage is the same way. There's a starting point for rates, and that's based on the economy, on inflation expectations, the outlook for U.S. housing, etc. And then there's additional risk that's based on you, your credit score, the size of your down payment, whether you are using an adjustable rate mortgage, how many units in your home, and so on. These additional risk factors, these personal ones, they can add up to 2 percentage points to anybody's base mortgage rate. And we call these changes loan level pricing adjustments, LLPAs. You don't need to know that term. It's not going to be on the test. But LLPAs are the mortgage industry's version of risk-based pricing, like you see in auto insurance for people who speed, or health insurance for people who smoke. When there's risk in your profile, specifically you pay more. But with the First-Time Homebuyer Mortgage Rate Discount Program, risk-based pricing for first-time buyers who qualify for conventional mortgage financing, again, backed by Fannie Mae or Freddie Mac, and who are in a low to moderate income for their area, for those buyers, their risk-based adjustments are gone. Poof. Totally wiped out by the agency to zero, which has the effect of lowering eligible buyers' mortgage rates back to their starting point, which makes it cheaper at a time when base mortgage rates are elevated for millions of U.S. renters to buy their first home. Brings those rates down. So how much is getting rid of risk-based pricing lower rate? Well, let's look at the chart. Depending on your credit score, your expected down payment, and your qualifications, your mortgage rate could go down as much as 1.75 percentage points. And that dramatically increases how much home you could afford to buy, or dramatically reduces your expected monthly payment on a home. And the best part is that this program that eliminates LLPAs once you're approved for your mortgage, the discount is automatically applied with no extra steps needed on your part. All you have to do is meet the program's 3 specific requirements. First, to use the FHA first-time homebuyer mortgage rate discount program, you have to be first-time homebuyer. It's right there in the name. And in this instance, first-time buyer is defined as a person who hasn't owned a home in the last 3 years, which means you could have owned a home previously at some other time in your life, just not in the last 3 years. And there is an exception here for displaced homemakers and for single parents whose prior residence was jointly owned with a spouse and you own no other properties as a couple, and a few other exceptions apply as well. Ask your lender if you're unsure about whether you'll qualify as a first-time homebuyer. And that's the first requirement. You must be a first-time homebuyer. The second requirement is that you have to be buying your home to be your main place of residence, where you will live primarily, and you have to move in within 60 days of closing. The first-time buyer mortgage rate discount does not apply if you're buying a vacation home or short-term rental. It's for primary residences only. And third, to get the FHFA mortgage rate discount, you must be a low or middle income wage earner relative to where you live. Your income cannot exceed the area's typical household income with one exception. If you're buying in an area that's considered high cost, where homes are objectively more expensive than in other parts of the country, the FHFA gives a grace of up to 20% more on household income versus the area. So you can be a high wage earner in places like San Francisco, Los Angeles, Seattle, still get the discount and benefit from lower rates. And one more important note, to see the discount that will be assigned to you, the mortgage pre-approval or application is going to be required because your new rate, your discounted rate, it can only be determined after your risk-based pricing is assigned, and that requires your credit score, your income, and how much you expect to put down. It requires about the property and how many units it is. All this is part of the answer. So start a pre-approval. You can do it with any lender you like. You can do it in person. You can do it online if you want. We have a straightforward, simple pre-approval available online on our website. That URL is homebuyer.com/fast. But you can get the discount with any lender offering Fannie Mae or Freddie Mac backed loans. To get updates on mortgages when we post them, subscribe to the channel, hit the bell, come back and watch often. I'm Dan with homebuyer.com. Remember, pre-approved buyers do better. Happy home buying.